Happy Friday, Eric Bible with the Bible team at Neo Home Loans. Where, yes, it is Friday. The Friday vibes, unfortunately, are not as strong as I would like them to be. And it really comes on the back of a few things. Number one, interest rates. As we've seen really over the last few weeks, interest rates have defied expectations and have continued to march upward. This week, no different. We saw interest rates as of this morning break multi-decade highs yet again, 7.625. And here it's becoming a little convoluted as to when we can expect to see some reprieve. And I'll get into really kind of the prevailing narrative around that. Additionally, we're entering a possible, or it's looking to be more of a reality, a government shutdown. And now narratives too around more price reduction. So some interesting stuff on that I'll get to here in a second. But first, really need to unpack and understand this week and what drove rates higher yet again. The prevailing thought, really, as we know, is that as inflation declines, so would mortgage rates. And unfortunately, we've seen the exact opposite. Rewind also to Fed Week 2 weeks back. Jerome Powell and the Federal Reserve did not hike rates, and the expectation was that was going to provide some cooling to the mortgage market. However, it did not. And the prevailing narrative there was higher for longer. And we fast forward to this week where really no serious economic new news was released, yet mortgage rates shot up, and in turn, stocks tumbled. And historically, when stocks get beat up, mortgage interest rates benefit. Well, this week that was not the case. And it's really on the back of this prevailing narrative of higher for longer. And given the fact that there was effectively no news this week, yet mortgage rates rose sharply, it is becoming glaringly obvious that the markets are coming to terms that the Fed is not going to cut rates at the pace or time that was previously thought of. Now, yes, there are speculative thought out there that we're going to see cuts sooner rather than later. But as it sits right this very minute, the market is saying otherwise. And in turn, we're seeing mortgage rates rise higher because of that. Now, yes, it's uncomfortable, no doubt. It's creating additional slowdowns in housing. We're seeing that with pending home sales as of last month, taking yet again another bit of a beat up. Now, with that, though, in every challenging environment, there is always opportunity. As we rewind to last October, when rates were challenging multi-decade highs at that point and ultimately got there, the buyers that stuck out and charged forward were in a reduced competition environment. I see much of the same unfolding here now, and allowing the opportunity for buyers to potentially get into a home at below list and with minimal competition, and the opportunity to refinance at a later date, which, albeit no one knows, the reality is mortgage rates are cyclical. Now, again, I don't want to advocate that, hey, they're going to be lower tomorrow, because again, no one knows. But the reality behind the situation is at some point, mortgage rates will decline. We don't know when, but they will. And that's just the reality of how the markets work. So opportunity is upon us, and buyers have to take that opportunity. Now, additionally, we're getting a ton of questions around a pending government shutdown. And the reality behind it is it looks like it's coming to fruition this Sunday. And if we look to history as the best context, in short term, it should have really no impact to mortgage rates. Now, the question becomes, if it's a prolonged shutdown, what could happen? There, it could possibly ignite some other facet of the economy, which in turn would benefit mortgage rates. Obviously, it's an evolving situation. It's something we need to monitor and will continue to convey as that information becomes available. Obviously, a shutdown impacts millions of federal workers, services, the list goes on. It's something we really hope that we can avoid and get resolution around quickly. But as it happens, again, it's something we will share with concise details. Now to price reduction. Redfin yesterday published an article showing that home sellers are grappling with the idea of price cuts. And we're seeing it become a more of a talking point yet again here in Southern California. And something that I really would challenge you all, if you have sellers that are entertaining, hey, we need to cut the price to induce activity, or a buyer that is looking to underbid on a prospective property, I would challenge you to look at the example in the email. We were introduced to a client earlier this week that was doing just that. The seller was going to entertain potentially reducing the price by $75,000. And through our analysis, we were able to show keeping the price the same, but crediting the buyer $35,000, which yielded a $916 a month payment savings, which would equate to a 1.38 purchase price. So it ultimately saved the buyer significant on their monthly payment, but equally as important, it put more money in the seller's pocket. And it was through a permanent interest rate reduction, so a buy down. Now, again, if you're running into situations where you have buyers that are continuously underbidding on a property, or sellers that are deciding whether or not to chop price or do something of that nature, we have tools at our disposal that can help continue the conversation forward. As always, we're here to support and guide in these not so ideal times. As we've all said before, yes, there is chaos out there. Yes, it feels not ideal, but no, in times such as this, there is massive opportunity. It's just on where we look for it. Again, if you need help conveying this message, or if you need help with anything, we are here to support you. As always, make it a fantastic Friday and an even better weekend. Thank you.